Peter Cardillo, Chief Market Economist at Spartan Capital Securities, joining us this morning. Peter, I wonder if you've been listening to some parts of what President Trump has been saying. It's not really groundbreaking. He's been repeating this for a while, the fact that his administration has been doing so much to improve border security and various other factors. What do you make of the fact that tariffs are still at 10%, they haven't moved up to 15%, and the AI angle, the fact that maybe some people are saying this is overdone?
Well, I think it is overdone, and at one point or another, I do believe that the new tariffs that he imposed, Section 122, needs to be approved by Congress once the time limit is up. And so I think, it's really up to Congress now whether or not they will extend this and whether or not there are other tools in his tool chest. And so I believe that eventually there will be renegotiated deals and at much level. I think, President Trump is using this as leverage. Obviously, he had a defeat at the Supreme Court. And so his agenda is basically based on tariffs. And so this is a situation where he is going to fight to the very end. And I think at the end, he'll, reduce tariffs. Look, we've seen this happen over and over again. President Trump is known for starting out of the gate at full speed ahead and then reversing course because of various factors. Also because it means that, inflation in the States is elevated, sticky, and it's not coming down. And it's not coming down because of the tariffs. They still haven't worked their way through the system. So, I think that's a concern, even though the administration and President Trump has said many times that inflation is not due to tariffs. Well, I don't I don't agree with that, and I think the American consumer doesn't agree with that. Prices at the grocery stores are very high, and so I think eventually those tariffs will come down.
Okay, so you're thinking that tariffs could come down. So there could be an impact where, the ask is of a tariff refund, on the back of the rollouts that have already happened. So that is something we need to keep our eye on as well. And you're talking about stagflation risks there. Peter, another aspect I want to talk to you about when it comes to the US markets is the AI trade. I know you've mentioned it in the past as well that we're still some time away where this entire gamut will start giving us returns. How are you looking at it? Because with Anthropic coming and saying that they are going to look at tie-ups and partnerships with SaaS companies, there is some bit of a respite that's coming in terms of US, IT companies. We do see a fallout impact in terms of India as well, and hence this entire ecosystem becomes really important. What is your view?
Well, if I heard your if you heard your question correctly, I'm having a little bit of trouble with the audio here. But in any event, the market always repeats itself. Whether it was with the .com, whether it was with the telecommunications, whether it was with the subprime, whether it was what it is now with the AI trade, the pendulum always seems to swing from one side to another, and things get overdone. And so, 3 months ago, 4 months ago, it was it was the hottest trade around. It was carrying the market higher and higher and higher. And then all of a sudden, realization sets in. Will all this spending come to the bottom line? all this money that's been put into the AI. So the market now is rethinking that, and eventually things will, I believe, will smooth out like we saw with the .com era, and move ahead. So it's nothing new that we see this type of uncertainty, or I should say uncertainty, but it's nothing new that we see market exaggerations being somewhat corrected.
Yeah, fair point. Peter, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you.